Oh, goodness sakes alive. All right. So it was a really great price target for 120, which was basically this pre-split back in 2020. Okay. Before we had this, all kinds of SPY inclusion and the run up and, QE, oh my. Anyway, the fact of the matter is we've come all the way back down and then we gapped below it. So that was a little bit more drama than I expected. We literally, here's the gap, 121. That's the low of last week. And the open was 117.50. The high is 119.67. So we're only $2, not even $1.50, but that is a gap fill. So it is very ironic. Again, I'm not making like an effort to find this stuff. It just happens that Tesla gapped down on the weekly and is an absolute air pocket of risk right smack dab to about 64.60, which is the next quarterly area. So I'm a little impressed that not that the rate of speed has picked up, but there's no sign of this having capitulated yet. We did a little pre-market bounce into 115.64. That's basically the line in the sand I'm using right now. So if we can get it back above this 115.64 on an hourly close, we can run up to 125, 130 pretty quickly. So because of how extended it is, okay? And then just kind of keep in mind the gap fill target, where the heck did it go, is 121.02. So I'm still fascinated that we've picked up to the downside without any, so far, test of that monthly price target of 120. We're not so far away, $10. This moves pretty, average true range is pretty wild here. But the point is there's still massive risk in this giving sway in the market following. I'm still very bearish, as you know. All right, so Tesla's one thing. I look at Tesla and I think, well, who's going to intervene? But if they do, it really should be a snapback rally of size. So we'll see what we get. Right now, a lot of margin call talk, a lot of expectation that they're going to pile in end of year tax loss selling, and then January it's going to pop up like a daisy. So it's tough to position for puts if you are expecting a very large, at least I am, IV crush on a potential first of year buy frenzy in Tesla. So just kind of for whatever that's worth, just keep that in mind. We're definitely not safe. There's an air pocket of risk, but this tax loss selling could abate. That's really going to be your trigger still. This 115.64 above. That's the kind of thing I'm looking for, honestly, for Tesla. Honestly, I'm looking for that type of move that's going to get a little bit of shorts covering in a hurry. I think we're going to have a little bit more here on the upside for Tesla. I think shorts, if they see this come back in 121, I think we're going to see a lot more short covering in Tesla. We have a lot of work to do. The most, honestly, that I'm expecting is this tag of 121. So the Tesla long, whether you do it through a call spread, with January or chasing on the whatever time frame you have. For me, the most I'm expecting today would be this 121 tag. If we get some follow through, remember, shorts to cover could be 5-6 days in how extreme this is. We could easily get, I wrote this, didn't I? Yeah, I did. We could easily get back up to 130 and then 150, but we got to start somewhere. This is a very protracted move and it is still oversold, which means if you're trend short, you really don't have a reason to cover, right? This is just a little bit of drama here. I just thought it was a little bit too much drama. I thought that was a really, really, really solid place to cover. So I would much rather re-short once we get up here. I would love this to be 150 and re-short. Beautiful. That's love. So the 115 calls are coming in hot and heavy on Tesla, but they haven't gotten above. No, the 120 calls are coming in. That's the only thing to me that looks viable as a short covering potential move, and we need a lot more. When everybody starts to climb on that bus or boat or whatever, and they start to look over on one side, the thing tips over. This is exactly the market maker's beautiful way of saying, screw you. I just don't know if we're going to get above that 115.64, but if we do, it's probably going to be tomorrow. And it will open up here. My bet would be if we are going to have follow through right here, we're going to open up about 121. And then you're really going to see the shorts cover. Maybe we're done for today, or maybe we push a little bit more, but I think that's going to be the drama of tomorrow. The shorts are going to be like, I got in here a little bit late, didn't I? That's what they're thinking. That's the trouble, right? We don't know how this is going to react. So you have only, if you're a bear, your biggest hope is that this will not get back above 120 on a weekly close. It'll stay firmly below. Tesla did not get above that 115. Let's call it 116, but it's what I would call a bullish harami, done for the day. And then tomorrow we open up above 121. You're going to see some shorts cover. I don't know if it will. Honestly, this is a lot. This is a 100% fib retracement. It took it out, right? This is a 400, no, wrong. 400 EMA. It's just, it is supposed to bounce here unless there's something completely wrong. Basically, my rule of thumb is when everybody starts asking, should they buy puts in the hole, is soon after market makers will say, thanks for your money. Personally, I think it's done for the day. Like I already said, that's a bullish harami. It's tagged the 3-day, came back in. The risk for the bears in Tesla is that this puppy opens up above 121 tomorrow. Now, if you're trend short, you don't care about that. You got plenty of time. You've made tons of money, right? But normally, you get a massive short covering rally right about here. Unless it turns green again, we don't have the probability of gapping up to 121. This has to get above in order for this to be short covering. Otherwise, look at this. Oversold is bearish on an hourly. Oversold is bearish on a daily. Oversold is bearish on a weekly. That's all there's to say about that. Intraday, you got to get above 115.64 on a close, and then we have a chance of gapping up above 121 tomorrow. And Tesla in particular is pushing up to that 121, which is my expectation. We'll see if it can get and stay above 121. If so, it'll shoot up to 130. Okay, on Tesla, my whole thesis, right, you heard probably yesterday, was that this is a potential bounce inside that monthly level. Remember how I got that 120 price target? All right, so this is something that was from July of 2020. We overshot it. And my baseline bet was that, wow, that's pretty aggressive, but it's a lot of support. Let's see if we can stabilize and move back up. So on a monthly, 120 is kind of key, but in another kind of realm, you can see this gap down. That might be, and I said might be, capitulation selling. That's a bullish harami. Wouldn't surprise me if we push up into 121. If we get a real little, surge in the morning, we could open above 121. But the point of the matter is 121. I'm looking for 121. It's not very much, but it's enough to get shorts, which was my next part of this, right? First was we really should have a test a retest of that 120 monthly. Okay. Second, we really, if this is capitulation selling, even if for the moment, we get a little rebound here into this gap fill. That's all I'm looking for. Now, I want to do a big warning on this though, because I was, being cheeky about this, saying, okay, I can see a case where Tesla goes up and the market continues lower just because it's so stretched. Read an article by Steve Sosnick, and also, what was the other one? Some other data that came in on the Tesla. Hold on. That basically, I thought was very interesting, and I don't know. Okay, so here's what I wanted to say. Steve Sosnick from IBKR did a newsletter and said, amazing how many people, it's one of their top 10 traded tickers at IBKR. IBKR is the largest brokerage company in the world. Okay. He only has access to the top 10 in volume, buying versus selling. It's basically a net buying, net selling indicator, literally. And so according to their level, everyone's been buying everyone. Tesla is still ranking in the top 10 of buys. In other words, folks are buying on the way down. I have a very firm thesis about this. You buy on the way up, you sell on the way down. My little 10, week indicator or trends when the market is behaving, because we're in a bull cycle and the Fed obviously is adding liquidity and or rates are at zero. Whether it be macro or micro, technical or intermarket, when we're in a bullish trend, you buy on the way up. When we're on a bearish trend, which we are, you sell on the way down. But that's not what they're doing. They're buying. So first of all, there are a lot of people underwater. And according to Steve, this would have to have a 70% rally just for these people at the volume weighted average to get up to even, to break even. And I thought to myself, really? Basically, he swagged it. A 70% rally would bring this back up to about 187, 177, I think he said. So basically right back up to this area. Isn't that fascinating? Anyway, we'll see if that happens if we do. But there's another thing, which is short-term Tesla bulls, which I am, need to keep in mind that the short sale rule was in effect for Tesla when it declined over 10% on Tuesday. So when this declined, they couldn't, that's it. You can't short beyond that. Basically, it's hard to borrow, however they did it. But basically, now that's resolved itself, that's not going to be in play anymore. So bears can come out again, right? And take this down. So all I'm expecting right now for this first little phase is gap fill at 121. Second is right here. See this hourly gap fill? The low is 122.51. That's all I'm really, really, really hoping for. And that's a gap fill. That's a gap fill on the hourly. Let's see how we do this morning. Maybe we get a little bit more energy. Maybe it comes back down, moves higher. But just keep in mind, you got a lot of people underwater that want to sell, and you got a lot of bears out there that want to short. So what did I do? Let me open up my program. I did call spread because the IV is stupid high, right? It's like 100, 110. So you have to have a really explosive move to make the numbers work. I decided to do a call spread, and I did a few of them in different durations. So in other words, weekly and monthly. We'll see what happens. But I'm not one who's playing the whole, zero DTE game. That's, if you did, you're going to do fine, right? By the way, I just tweeted something on that, which is so cool. Yeah. From tier 1. Yeah. So anyway, my 121 is going to be hit. Above that, you can see this 122.5, and then you can see 128.62, or basically 129. If we get, and remember, I expect this to be a dance. Everything's a dance. Learn to dance. This is basically above 129. We can head back up to the 21-day, which is basically the 150 area. I would say if this is really going to work, Be extremely careful when it comes back up to 137.22. On the upside, we could see 150, 160, but that would be surprising even for me. I don't think we're going to get, I think 137 is going to be a really, really tough wall. Really tough wall. Maybe I'm dead wrong, but I think there are too many people underwater, and short selling rule, right? That's now been removed. I think it's going to be, and the market's not easy right now. All right. So here's that 121, right? Literally the high of 120.60. That's not enough. We need 121.02, and that's all there is to say about that. So let's just see. Oh, no, we did hit a high pre-market of 121.08. But the open, not enough, 120.38. This is gonna do its thing, but it needs a little bit more push. Tesla down 1.8% since the open. Let's see if we can get a little bit more. It's expected, right? We tag, come back in a little bit. This is the level we need to hold above this particular candle high, 116.27. A lot of folks are going to be very quick to take this off the table on the open. Let's see if we can hold above 116, down 2%, but it's holding nicely. So again, I still have my expectation that this is not ready to be, to break below 116. I wouldn't be surprised if it came back down to 116, which is the top of this bar, but I'm still expecting that gap to fill. In other words, the shorts that have been greedy gusses, and now they say, maybe we're going to have a bounce. I better cover now. And that's the fuel I'm looking for. Tesla still hasn't hasn't tagged the first gap fill on the hourly, but it's done really, really well to fill the gap fill on the daily. So this was the only first price target. Let's see if we can get back to 121, stabilize here. Let's see if we can stay above this 119.67 to move into this gap fill. Then it probably pulls back. Maybe we're going to have another follow through day. Tomorrow is Friday. It's the end of the year. JP Morgan collar at 38.35 has to roll. It's a quarterly thing. And in the moments that it rolls, it is bullish. Right now, we got this Tesla, which is a little bit of a sentiment play, right? As Steve Sosnock said in his article, and I DM'd him, I said, it was an excellent article, well-timed. It was basically, it's one of the top 10 stocks purchased in the last month. Every single day, they're buying Tesla. And given his assessment, they're all underwater. So they need a strong rally to even break even. And there are a lot of shorts. I can get it for him there. Okay, so I like the way that I played the call. The move in Tesla was actually a spread, a few of them, but because it's just stupid, right? 130 IV. Come on. Very, very, very frustrating to make money when it's moving in the right direction by a whole bunch, and then you only make like 30% on your directional call. That's just frustrating. Tesla hitting its head at 121.02 daily gap fill, but looking fine. 122.51 next. No, Tesla's still good. I haven't done anything with the stuff that I have. I still think this is going to tag that 122.51, and then we'll see if we get a pause. Yeah, these two. I think that'd be a fabulous time to reshort. Absolutely fabulous time to reshort. With Barron's is reporting Musk had a margin call. All right, we are here. First target reached, second target reached. All right, so this is working. By the way, I haven't changed anything. So I will see if we can stay above. But I think 10%, we had a negative 10% on Tuesday. We're having a positive 10% on Wednesday. That might be it for today on Tesla. Oh, I got it 11. Sorry, I got into reading about the nation's largest egg producer. It was very exciting for me. Prices for conventional eggs. We're not even talking about the brown ones or the organic ones. but they were so expensive that people moved to organic and brown. I was so spoiled, being raised on a farm with the orange yolk eggs that literally would get collected and put outside the front door where my mom and I lived, with a lovely stainless steel container of fresh milk with the cream on top. So spoiled. So spoiled. All right, that's it. I'm going to say for now, watch this indicator, because the only exception is Tesla. And the only reason why I was so bowled up on Tesla yesterday was exactly for short covering purposes. Don't let it fall back inside 122.51 if you're short duration, because then it's going to come right back down to that 119.67. And by the way, that's what I expect. So it wouldn't surprise me if this comes back down. If it's strong, it'll hold, move up to about 125, pull back down, could even get a little bit more volatile around here when it pulls back down, and then head back up. But this, to me, is the only thing that is going to be potentially, again, potentially supported, bingo, right at that 120. Now, it does not mean in any way, shape, or form that I think this is done going down. It just means I'm expecting a little bit here of a bounce, okay, and then trounce. There's nothing here that's bullish, big picture.